The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. It is Tuesday morning up here in the mountains, 7,000 feet. We definitely have gotten our spring weather. I guess, I don't know, in some parts of the world it might be called summer. I was just chatting with producer Al a little bit before the show got started here. Right now, weather.com is telling me it's 65 degrees here, beautiful sunny day. It's supposed to go up into the 80s today, I understand. And you know, we can, I think we probably get a little bit of cooler weather too before summer really arrives. But just, it's what we got going up here. I have a friend who lives here in Santa Fe as well who jokes that Santa Fe really has two temperatures, hot and cold. And she's not far from wrong about that. That's pretty much true. Contrary to what a lot of people think, we do get a winter up here. We do get snow. We do get some cold temperatures. We're at 7,000 feet, but I think a lot of people hear New Mexico, and they forget that they just don't realize. They assume it's all, I don't know, a bunch of cactus. We do have cactus, but we do get snow. No snow today. It's and actually the snow caps up in the mountains they're melting. There's a little bit up there. I can see it from my office here, but it is starting to melt. So did anybody take a look at Google today? Not the stock, the homepage, google.com. There's a very cool little graphic. Take a look right now if you're listening. Go over there. Hopefully it's still there. A little cool graphic that unzips to be a tribute to a guy named Gideon Sunback. I'd never heard of him before. He was the inventor of the modern zipper. So today's his birthday. I believe he would have been 132 years old if he were still around. So that was very cool. Very cool little graphic there. And that's the kind of creativity where Google can really shine when it wants to. So, of course, this is the Small Cap Show. And I want to give out the phone number here. Give a call, 877-927-6648. Now, of course, the market reports tonight. And you know what I'm talking about. The market, based in Cupertino, California, not Wall Street. Don't get the two mixed up. You know, and of course, the world has been on a slow decline to end times in the past few weeks. As the market, a.k.a. Apple, has declined. You know, it was ready for it. Apple was ripe, for a pullback. Not surprising to see it. It's understandable. The earnings report tonight really will be the news of the week. Sales of iPhones in the spotlight. Its effect on carriers. Also, a slew of suppliers. We'll also get a close look. Cirrus Logic, Texas Instruments, Broadcom, Qualcomm, a few other companies will perhaps also participate in the Apple trade one way or another. Now, of course, other companies reporting. We are smack dab in the middle of earnings season. Radio Shack, and I put a Radio Shack chart up there on Tiger TV. RSH is the ticker. Now, much is being made of the point that this stock is at multi-year lows, like decades-long lows. You know, this is not a stock that has appeared on my screen for many years. The newsletter that we have just launched here, and it's up on TFNN.com, Low Price Leaders. So this Radio Shack is not a leader. It's low-priced, but it's not a leader. So it would definitely not qualify for inclusion in the newsletter. It just doesn't make it onto my screens. I look for price strength. I look for volume strength most of the time, fundamental strength in terms of revenue growth that is behind earnings growth. And, of course, I won't make a buy or sell decision based on the fundamentals. That's really just a screening mechanism. So anyway, Radio Shack has not landed on the screens. I put a weekly chart up there, and based on what I just said about looking for a company showing price strength, if you're taking a look at the chart, it is pretty obvious why Radio Shack would not have landed on my screens of price leaders. It's just been trending lower. On the chart you have in front of you up there on Tiger TV, it's been trending lower since 2010. And in fact, has really been quite a dismal performer for even longer than that, going back to 1999. So, in any case, yeah, very, very poor, disappointing earnings report today. Apparently a slower pace of mobile phone replacement. And that's an interesting little factoid. Who knows? Maybe that could show up in Apple's report, although the Apple products often seem to defy what is going on in the marketplace outside of that. So that will be interesting to see. Of course, the iPhone sales will be under close scrutiny when the company does report. So just, thinking about Radio Shack and that little data point about mobile phone replacement slowing down, I was thinking, when I got a phone, I got an Android a couple years ago, and it's not the one I have anymore. But at the time, when I got that particular phone, I remember talking with the salesman, and it was in one of those kiosks in the mall. It was in the Vero Beach Mall. If any of you are the Indian River Mall, whatever that is over there, if any of you spent some time over there in Indian River County, that part of Florida, gorgeous part of Florida. But I was talking to the salesman. He was telling me that a lot of people actually replace their mobile phones every 3 months or so. And that just tripped me out. That was just it. That's got to be kids, got to be college students, maybe 20-somethings who are spending, maybe 20-somethings spending their disposable income before they realize they should be saving and investing, or teenagers perhaps with a lot of disposable income from part-time jobs, allowances, whatever. I can't believe there are too many. I haven't seen the data on this, not at all. I'm just speculating. I'm sure the data exists out there. My guess would be that it would be the people replacing their phones every few months would skew much younger. Personally, I get a new phone about every year or so. I find they just don't really last all that long. Although the iPhones do last longer than some of these Android phones. So let's see here. Let me reload my screen. Got a few things popping up there on my screen there that I didn't want to show. Okay, let's talk a little bit about some of the other stocks besides Apple, besides Radio Shack, which is not a low-priced leader by any stretch of the imagination. One of the names I've talked about quite a bit in recent weeks, and I'm still watching it because I do track recent IPOs. A lot of those can be some of the smaller cap names, some of the not necessarily lower price, but at least smaller in market cap. And we do, by the way, we do track small cap leaders as well, in addition to low priced, in the newsletter that we just launched. And by low priced, I mean priced between $5 and $12. That's the range we're looking at. No penny stocks. No penny stocks in there. And really that $12 range can be, whoops, hang on there. Just put something up on my screen I didn't want to. Playing around here with this. I got messages popping up. Sorry about that. That $12, that area between 5 and 12 can be extremely productive when it comes to stocks that are poised to make some big gains, ready to take off, ready for the institutions to jump in and propel the stock's price higher. Let me just, before I talk about Bunny, let me show you an example of one that I mean that was in that range that has done very well. Pulling back a little bit right now, but so is the market. So not unusual. Anika Pharmaceuticals. I talked about this on Tom's show when I was on there on Thursday afternoon. ANIK is the ticker on this one. And this is a company that makes bone and cartilage treatments. It offered a buy point back here when it was trading maybe around, let's see, between 7. You could have bought it back here when it found support right there at the 50-day moving average. Even when the moving average is crossed back here a little bit earlier. So you did have some earlier buy points back in here where I'm indicating in December. You had an opportunity on a pullback. So this is one that was priced in the single digits, rallied, is now trading at $15.60. You know, this is one of those that, investors who bought into this stock a few months ago, back when it was in the single digits, kind of have a choice at this juncture how you want to handle this stock. Wouldn't be a bad thing necessarily to take some profits on this one, as it is pulling back from those new highs. You know, another way to potentially handle this, if you do have a cushion in the stock, the pullback is normal. It's not behaving in any kind of worrisome or unusual fashion at this point. This is also the kind of name that you could potentially hold right now. So that's just an example of what I'm talking about when I'm saying the stocks between 5 and 12 that start out at that level and do have quite a bit of potential just because they are in a nice range, beginning to gather a bit of institutional attention. Remember, the mutual funds, we do talk to a lot of mutual fund managers on this show. I am going to start bringing some more back on again. And a lot of these guys, you know, they can't be buying the penny stocks. They're really not going to be looking at something that is trading under $3, under $5. They at least need to be in that range, somewhere above 5, and particularly I'm finding that 10 to 12 range can be extremely productive. Now, a lot of advisors, the CFPs, the folks who do help investors manage their portfolios and do their overall financial planning, a lot of these guys will sometimes put their customers into a basket of lower price stocks, and really they essentially treat that as a little in-house mutual fund by letting the winners run, cutting losses early. So that's more or less one of the approaches that I will be taking with the Low Price Leaders newsletters. I will be getting out of these stocks very quickly if they fall a certain percentage below a buy point. There are stops on each one, and we'll talk about as the weeks go on. I'll be going over those stocks, showing you what those look like, how you would gauge when the appropriate stop would be. In many cases, it's a percentage. In many cases, the moving average support also plays a role. So let's see. So Bunny right now, and I'm calling it Bunny. The name of the stock is Annie's. I'm going to be writing about this actually in an article I'm going to be doing for moneyshow.com. I'm a columnist over there. I do some videos for them. This is something I'm going to be writing about in a story that'll run Wednesday. So I want to talk about this a little bit more after the break. A lot of the opportunity in this natural foods area. A few other companies to take a look at in there, recent IPOs. So stick around. This is the Small Cap Roundup, 877-927-6648. I'm Kate Stalter. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back here, and I kind of keep digressing today. I was trying to talk about Annie's here. BNNY is the ticker, and explain that one of the things I do look at in the, not only in the radio show, but especially I'm talking about the newsletter that we just rolled out. You can check it out on TFNN.com. Low price leaders. We also cover small cap stocks. And in the universe I'm looking at, small cap means under about $2 billion. But I do understand that many of the fund managers and the indexes, of course, consider small cap to be under $3 billion. So that's, and I think I was chatting with Tom about this a little bit last week. A friend of mine, a former hedge fund manager who's now retired, but she reminded me that even as recently as 10 years ago, the definition of a small cap was actually under $500 million. So these change. Things change, of course. And anyway, Annie's went public, let me see here, pretty recently, just within the past month or so. Actually, yeah, back in March, this went public, and with a lot of fanfare. And it is correcting right now. Now, this is very interesting. I don't know. Yeah, I do have it on. Let me put a daily chart up there in front of you. This very nicely illustrates one of the points that I make about new IPOs and how to trade them. I know a lot of people get very, very worried about not getting in there on the first day of trade. And frankly, I got to tell you, I think that's a lot of the major media hoopla that goes on out there that kind of gets everybody all riled up about getting into the IPO. You know what? Let the investment banks, let their customers, let the insiders, let those guys do what they're going to do. Right now, here's the reason for that. You see, Annie's has been correcting in the past several sessions. That is very, very normal. Even when you don't have a market-wide correction, very normal to see a new IPO pull back, let it consolidate, let it develop its trading history, and that allows retail investors, allows all of us to get in there at a decent price. And frankly, right now, with the market in a downturn, I see what's happening today. We are showing some gains today. Nonetheless, the market does remain in a downturn. That's because we have not had a heavy volume day of upside trade to confirm any kind of new rally. And that is really a historical signal that I'm going to be looking for, whether it's buying small caps, IPOs, large caps, mid caps, it doesn't matter. And in fact, really, it's even that much more necessary to follow some of these market trading signals when you are in some of these lower priced, smaller cap names that tend to be very, very volatile. I mean, we've all seen it. Things that have no relation to Europe whatsoever get sold off because somebody in the Netherlands says something. So it's imperative to not to get too emotional and think, oh, something's a great trade right now, great time to jump in, because you can get shaken out very, very easily. Having said that, there are exceptions. But you have to be very careful about the exceptions. There are occasionally stocks that do clear a buy point in a market downturn. They can get smacked down very, very quickly. I want to show you two examples of that, of where both are trading lower, but one is actually holding up a little better than the other. I'm going to do that after the break, because the other thing I want to talk about today is some of this natural food segment that is doing very well. So Annie's is a great example of a recent IPO, a smaller stock. Let me see here. Market cap of about 880 million. Not bad liquidity, about 940,000 shares a day traded on average. This thing got a lot of attention at its IPO. So that whole segment, it's funny because I think everybody really focuses in on the mac and cheese, the snacks, the foods that the kids eat from Annie's, and it certainly is a very, very popular product. Its products are popular with parents of young kids, but you know, they also have salad dressing, vegan snacks, a lot of stuff gluten-free snacks and dressings. So a lot of stuff that you wouldn't necessarily be feeding the kids, but quite an interesting product line out there on this one. So we're going to come back. I'm going to talk about a couple other companies in that particular market segment. Then we're going to look at some of these lower-priced small-cap stocks, how they're trading, and how they illustrate some of the points that I'm talking about in the newsletter. I'm Kate Stalter. This is the Small Cap Roundup. We'll be back after this break.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, this is the Small Cap Roundup. I'm your host, Kate Stalter. Give us a call, 877-927-6648. Now, I was talking about Annie's before the break. I put up a stock of another one of these natural foods companies, and this is a grocer. It's the Fresh Market, TFM. I almost said TFNN. TFM is the ticker on this one, the Fresh Market. Now, this one went public back in November of 2010. And you can see there on, I've got it actually on a daily chart for you there on Tiger TV. I'm going to move it over to a weekly chart. And let's see, there you can see the stock has been rallying to some new highs. And it's pulling back a little bit right now along with the market. Now, this is one that immediately following that IPO, obviously in the summer of 2011, you did have the big pullback there. And the fundamentals are improving kind of in fits and starts. The company has been profitable going back several years, back, let's see, at least back to 2006. But it had an earnings decline in 2011, not unusual when a company goes public and there are a little, and there are a few of these expenses that do come into play. Also expansion. This is a company that has been expanding pretty rapidly, so that's not unusual to see that there is some kind of hit to the bottom line there in that case, but the company has remained profitable. Let's see, Wall Street expects, we're working on fiscal 2013 right now, actually. So Wall Street is expecting double-digit earnings growth in fiscal 2013, fiscal 2014, and looking pretty good there. Earnings growth of above 20%. Those are pretty nice stores. I've been in those, and kind of like a miniature version of Whole Foods. That whole natural food segment, definitely an area that is expanding. And something that more and more consumers are interested in. Obviously, the fact that Annie's organic mac and cheese is something that is catching on with people. That's something that shows you this is a product segment that is in demand, and that's one of the characteristics of a top growth stock, is that they do have a product, a service that consumers or businesses, whoever that company's buyers are, that they do want. So this is an interesting one. It is now really more and more showing the requisite kind of fundamental and technical strength to land on my screens. Now, let me just tell you, this is the kind of stock, the fresh market cap of a little shy of 2.5 billion. So it does fall in that definition of what some of the fund managers, what some of the indexes call a small cap. But, in terms of what I tend to look at, more under the 2 billion. But this is one that is very interesting, a nice stock, and I believe it's reflective of that trend towards more and more interest and demand for that natural, organic, gluten-free, vegan, that entire food segment. I mean, you think about it. It's some of that processed stuff. I just got to say it. Some of that stuff is just nasty and unhealthy. And I'm not even. A lot of people make the argument that it's cheaper. I'm not really sure about that. People make the joke about whole paycheck, calling Whole Foods that. But, I'm really not sure you can say that some of these frozen, sodium-laden kind of packaged foods are necessarily cheaper than buying some fresh fruits and vegetables just in a regular supermarket at an Albertsons or a Safeway or something. So, anyway, okay, see, it's easy for me to digress on these things, but definitely the trend toward healthier eating is picking up, and you are seeing some of these companies benefit from that. Okay. Let's move on. We have here, I want to show you, I was talking a few minutes ago about some examples of a couple of these lower priced, smaller stocks that are kind of showing some examples of some of the trading that I do tend to look at. Now, Omnova is a stock. OMN is the ticker on this one. This is a chemical company. Which chemical companies, their earnings patterns can be notoriously volatile if you kind of look back historically at some of these companies. And this is one, Omnova, OMN, based in Ohio. They make chemical additives used in floor coverings, paper, laminates, that kind of thing. And I have talked about this numerous times on the show. I really like, I'm showing you a daily chart there. You can see that pullback in the past couple weeks. I'm going to come back to the daily chart. I want to do a little bit of chart analysis here on the weekly. So this showed some nice action. I actually did enter this particular stock, and if you recall a few minutes ago before the break, I did say that generally speaking, I want the major market conditions, a confirmed uptrend, to be the main determining factor when I buy a stock or not. There are some occasional exceptions. You got to be careful when you do make those exceptions, however. So this one, I liked the particular pattern as it was kind of just edging a little bit higher here in recent weeks. Very tight trade. That is often something that does indicate that investors have confidence in the stock. Now, bear in mind, with a market cap of about 330 million, moving fewer than 200,000 shares a day, you're not talking a whole lot of investors, but there are about 170 or so U.S.-based hedge funds and mutual funds who do own shares in this particular company. It's obviously getting some attention with this trend higher right in here in recent weeks. I was looking for it to clear $7.31, which it did. So I did go ahead and take a position in that one. It is pulling back a little bit now, but it's actually, it's fine. It did not trigger any of my buy signals yet. I was looking at this point because the 50-day line, I'm showing you, actually, let me go back to a daily chart, and I'll show you the 50-day line. Now, you notice the stock was well above that 50-day line. You can't see a 20-day line on this particular chart. It is holding above its 20-day moving average, so good indication of some short-term support. In fact, it's trading above its 10-day line as of today, well above that 50-day line, so that would not enter into any of the discussion here about being any kind of stop. What I was looking at, first of all, whenever I make a buy here, I'm going to do the calculations on some of these smaller, lower-priced stocks. They often do need a little bit more room to pull back before you freak out and hit the panic button. You don't ever want to do that. I'm joking there. They do need a little bit more room to pull back before you decide to sell, because you can get shaken out very easily. You just can't put tight stops on these smaller stocks because they just can show volatile trade. Now this has, the trading character here has tightened up in recent weeks, so it has changed a bit. Nonetheless, I did a calculation, a 10% down from where I entered would have been about $6.75. I don't want to wait that long. I was watching the $7 level. It did hold above that level. It's currently, actually, let me see here. I'll tell you. I'll give you an up-to-the-minute quote of where this particular name is. Yeah, so this is at $7.34 right now. I'm fine holding on to this one. It's actually showing some pretty bullish action. Even in yesterday's overall market sell-off, the stock rallied higher along with the general market as the major indexes did rally off their lows. So did this. So some pretty bullish action in this one. I think as much as I joke about some of these companies that really don't have any relationship to some of the sovereign debt issues, for example, in Europe, you do see panic selling. This one seemed like, at least in yesterday's trade, was fairly immune to some of that. So this is the kind of interesting thing that I am planning on in the next few weeks, to seek out some of the fund managers who do hold some of these lower price names, bring them on, let them talk a little bit about some of their choices here, why they're holding on to this particular stock, how they identified it. So I'm going to do a little bit of that. I want to show you another name from the low price leaders list that was approaching a buy point. I did not enter a position, and this one illustrates kind of the other side of why you do need to be very careful in these particular markets. And if I had entered a position, I would have sold this one, by the way. So that's Lumber Liquidators. I want to come back to that because I understand caller Nick is on the line, wants to take a look at Broadcom. Hi, Nick. How you doing? We talked the other day, didn't we?
That's exactly right. Good memory. Thank you for taking my call.
Well, thank you for calling in. So I put up a daily chart of Broadcom up there, and tell me, so Nick, is this a stock you're looking at or a stock you own right now?
Actually, I was looking at this stock and was waiting for some news today after Apple reports its earnings.
Yep.
And probably in view of last week's a little concerned about some semiconductors, I think it might be worthwhile sitting and watching for the stock to see how it behaves.
I agree.
Qualcomm gave a little bit red flag to everybody saying about shortage of some components, and I wasn't sure if that kind of spreads to Broadcom likes.
Yeah, I think at least initially on the news, these things do seem to suffer sector-wide. It sounds like you've noticed that as well.
Mm-hmm.
Yeah, that does seem to happen. I completely agree with you that there could be some action here as a result of what Apple says after the close today. So I do think you're very wise to just be waiting on this one. What I would be looking at, let me see here. Let me just pull up a daily chart and see what a couple buy opportunities could be here. Yeah, this is interesting, Nick, because obviously as the stock has been falling, you've got your short-term, you can see your short-term moving averages are heading lower. So that's not a great sign, but obviously that can always change. But as of now, that is a bit of a red flag. I am looking at, let's see, 39.66 as a potential buy point. That was the high before it pulled back recently. Now depending on what happens, you might see a potentially earlier point than that, depending on what happens with Apple. So that could be something. I got to tell you also, though, the fundamentals on this one are not great. We're seeing, let me see, sales declining 1, 2, 3, 4 quarters in a row. You're seeing the pace of sales growth declined for 3 quarters, and then you had a year-over-year sales decline most recently. So, that's not great. You are seeing institutional ownership among U.S.-based hedge funds and mutual funds is declining. So there's a few red flags on this particular name. So, you might just keep watching this. I got to tell you something. It's not one that's popped up onto my screens lately. Yeah, I mean and I do run large cap screens as well in addition to the smaller caps. But this is not one I've been looking at. Yeah, I'd have to agree with you. Wait for the Apple report, see how it goes. You might be able to grab some gains in this, but again, that whole semiconductor sector, notoriously volatile, so you've always got to watch out for that. Hey, Nick, thank you so much for calling in. Great to hear from you. Call again on Thursday. I'll be back here again that day.
I will. Fantastic job as usual.
All right, Nick. Thanks a lot. Take care. Okay. So let me see here. That was it. Good call. Good call. Very, very interesting question, because these Apple suppliers, their moves could hinge on the fate of what we hear this afternoon. Let me take a look at Cirrus Logic here, which is another one. That's what I thought. Last I had looked a couple days ago, that was not doing so well. It actually looks much worse on a daily chart than it looks on a weekly. Let me pull this up here for you on a weekly chart. And of course, this is the voice recognition, very famous, used in the Apple iPhones. So this is a small cap, market cap of $1.3 billion, great liquidity, almost 2 million shares a day. Not at a buy point right now. Cirrus Logic needs some time to consolidate. We might hear some relevant news pertaining to this on the Apple report. Okay, I'm Kate Stalter. I'll be back right after this break.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, last segment of the show today on the Small Cap Roundup on Apple Earnings Day. I think it should just be declared a national holiday or something, right? Okay, I've put up a chart for you on a company that has nothing to do with Apple. Lumber Liquidators, LL is the ticker. I talked about this last week. Basically just the retail store. That's exactly what it sounds like. A lot of flooring products at bargain prices. And okay, this one, what was interesting about this one, I did include it in the first newsletter, and I am going to be updating this one because I'm going to be taking this possibly off the watch list. I'll definitely give you an update on this one. It was looking as if it had a potential buy point above 25.50, which it did clear, but then look what happened immediately right here, just pulled back. Part of that action was along with the market. It is getting support along that 50-day average, which is the kind of thing that just makes me kind of look at this and say, well, there could be some potential, but if I had gone into it at this point, I would have cut the losses. I did not, but it would have been one to have cut the losses pretty quickly on that immediate pullback after it cleared that buy point. However, on the upside. That 50-day support is good. This company reports earnings tomorrow morning before the open. So actually, by the time I update the next newsletter, we will have a little bit more information on this one. You know, and this brings up the whole question of buying ahead of earnings, what you do, how you handle a stock ahead of earnings. You know, I am a big proponent these days of just not taking the risk ahead of the report. Are you going to potentially miss out on some gains? Absolutely. Yes, that's a risk you take. But let me show you something else here that I want to show you a chart for Mellanox. Now, this is another one of those stocks from the chip sector. And this is a mid-cap, market cap of about $2.4 billion. It's based in Israel, so somewhat thinly traded considering that market cap, about 380,000 shares a day. So you see on here a huge gap up in heavy volume last week. That was after the company reported. So this is why it's often, in most cases, not a great idea to be chasing these stocks. There are occasional times where you might want to get into a stock that's gapping higher in heavy volume. But again, here, this illustrates perfectly why the market conditions are just really the determining factor in what goes on in any given stock. So Mellanox, after that huge gap up, it did pull back. You know, this illustrates kind of something else too, is that I think it's very easy for all of us to look at a move like that and just feel very frustrated. You say, oh, I missed it. There are usually, most cases, after a move like that, you are going to see some profit taking. You are going to see a situation where you'll be able to get back into the stock. This is clearly one that, if it does continue to hold up nicely above key moving averages, and obviously that 50-day line is going to move higher, if it does pull back, get support at a higher 50-day line, this one really could offer a nice new alternative buy point, perhaps in a confirmed market rally. I'm not making any predictions. I don't know. But that could be something to watch. And this Mellanox, to me, was just a great example of some of these approaches to take in the market and why not to jump in too quickly. Well, this hour has flown by. As always, I'm Kate Stalter. Check out the Low Price Leaders newsletter, TFNN.com. I will be back here on Thursday, 11 a.m. Eastern, with another edition of the Small Cap Roundup.